Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on euro currency. So on weekend we said that this is really critical area for the bulls, just because downside breakout will open significant space for deeper action and actually bring some hazards to the big patterns, which actually we do know stand on the monthly chart. We have the bullish grabber. It also could be raised if this pattern will fail, and actually this is the hope of the last resort here, so for the bulls, and they will either have to start upward action or bullish context will be destroyed. On Monday you could see that some pullback started, and actually you could see the same on European stocks, which means that probably the pressure that Macron has created by its statement concerning the elections and so on, this mess that has been brought in the European Union after the election in the parliament, so it's probably a bit easing, and now market out from some political pressure and return it back to the economical background and reestablish the major drivers for the euro currency and other currencies as well. So here it's current the situation, guys, where we do not need actually to make some long-term forecasts. We just need to follow the market in the current circumstances, because it is all clear concerning the bullish setup. We do know where is an validation point, we do know what pattern stands in place, and we do know what will happen if this context will fail. That's why currently, until it's still valid, we could make attempts to take the position with it, those who would like to. If you do not want to don't like this, and you think you have the opposite opinion that probably all this stuff should fail and dollar will keep rising, it's okay. So you just need to wait when this bullish pattern that we have on the weekly chart will fail, and after that you could start acting in a bearish situation, in a bearish context. But meantime, since we still have in place the grabber that we discussed, so you could see it here, that's the bullish grabber that we have on the weekly chart, and until it's still valid, it is not really safe to consider taking short position immediately. This week we also will get retail sales, and it's a really, well, chance exists that it will be a bit weaker. So because consumption is dropping right now in the United States, which might be also supported to the euro currencies, because it might become the dovish sign for the dollar. So this also might be some additional support for this short-term pattern. But in general, situation tends to be tricky, because as I already talked last week and this week, these diversions continue. So if you take a look, for example, on the 10-year bonds, you could see that yield is dropping. So here's definitely demand for safe haven assets. As I said, if we would get rally on the gold market, I would say that's the reason for geopolitics. But here is difficult to say. Maybe some domestic political events in the European Union, in the United States, or some other geopolitical events makes investors to rise demand for United States debt, or investors just do not believe in the policy of the Fed, or the promising of the Jerome Powell that they intend to cut rate only one time this year, somewhere in the end of the 2024, and markets still anticipate more rate cutting, more dovish policy. That might explain this performance. Conversely, it's difficult to explain the same performance with the same reasons on the dollar index. So you could see that dollar index actually is not dropping. This is weekly chart, guys. On the weekly chart, it is interesting that we've got the same grabber as on the euro, so in opposite direction correspondingly. Because on the euro it's up, corresponding on the dollar index it should be down, and we've got it. Maybe this week we will get another one, because you could see that dollar right now is testing the MACD line as well. But what we're gonna do with this grabber, that's actually stands opposite and it's just taken out of the stop. And in general, this performance is not really corresponds too much to performance on the yields So it should be vice versa. So if yields dropping, dollar also should dropping. But here we do not see it. So it means that one of the markets are wrong. So we should get either collapse on a dollar, which is suggested by the euro currency pattern, right? Or we should get some rally here with this pennant on the 10-year bonds and other bonds on the United States market. So this a bit tricky situation, as I said, makes me think that we should not really trying to run ahead of the train. So we just need to follow and see what will happen. We have the pattern in place, we have the step in place. Those who would like to follow it, you could follow it. If you do not want or are not sure with the setup, that's okay, that's fine. Just sit on your hands, see the clarity. When we get the clarity with the grabber, we will decide what to do. Maybe this moment situation with this contradiction, this divergence between the dollar and the yields will be resolved somehow. We'll get the answer on the next direction. So that's why I do not see any necessity to make some forecasts, analysis, what will happen, who will win, yields or dollar, or in what direction it will follow, just because we have step on the euro currency already. Just let's follow it, and then within a few sessions we probably should get some more information, and hopefully that will be a bit easier and clearer what's going on in reality.